Hey, Richard A. Welcome aboard. So we're getting all ready to roll here. Saul's going to be joining us. Trade Along Live with Saul here daily. Trade Along Trading Academy is the website to come into this service as a guest, tradealonglive.com. Hey, Anand, they sent something out to you. They were having a price increase, so they just asked me if they should send it, so wanted to make sure that you were all locked in and up to date. So check your email. Hey, Pat, how are you? Luis, Julio, Johnny Z's in the house.
All right, good morning, everybody. Can everybody hear me all right? All right, let's give you our levels for this morning. Our pivot this morning is 43.30. Resistance above at 40, 50, 62, 74, 85. Support below at 20, 09, 42.96, 85, 74. Pivot 30. Support at 20, 09, 42.96, 85, and 74. Resistance at 40, 50, 62, 74, and 85. Not to be an old horse, but if you look at the hourly, can we tell when the FOMC stuff came out yesterday? I don't know. Look at that craziness. What they got down to 42.40 and up to 42.0370. So 130 point rotation there after or during FOMC stuff. That's too much information there to try to for anybody except like those algos to try to comprehend and deal with, right? But it is what it is. But hopefully you did okay prior to that, so we didn't have to concern ourselves with that craziness that happened yesterday during FOMC stuff. And we'll trade the fallout today, whatever it occurs, and it's a little bit calmer, but it is what it is. So it's a new day today, right? Every day's a new day, and we'll see where the market takes us. It's kind of been quiet here for the last, hour or so, considering. Yes, well, the levels will be printed on the chat in just a couple here. Just getting them typed up. And they'll come up on the chat window here in a minute. So those levels, again, are a guide to the day. We can add to them, tweak them, adjust them a little bit, all depending on the price action. Yesterday, we talked about not even taking a level because of the way the price action reacted prior to that. So consequently, you have to. Nothing here is etched in stone, right? You have to see what the market is telling us, and then react to it, and then adjust accordingly. And if you look at the chat, there they are for you. The levels that we gave out today. Like I said, they're a guide to the day. Nothing here is etched in stone. We can fix those. We can adjust those. We can tweak those. Whatever it takes to make this happen. All right. Again, if anybody has any questions, feel free to ask in the chat. All right, as we are just kind of hovering around here in this little range, found a little game that the market is playing, and we'll see where the market wants to take us. And just make sure whatever trades you're doing, just keep your stop in place, and we'll go from there. And again, we've got resistance up here at 40, so kind of for now, no man's land here. And just waiting to see what happens. Let's see if there's any numbers coming out this morning. Talk about what the Fed said or didn't say, what the commentary was yesterday after his the big raising of rates as we quickly come up here to the 40 area. Well, not quite. So we have no numbers coming out this morning. So that's okay. As we'll see what the market wants to do up here against our 40 area. All right. First, some of the commentary that I read yesterday after the news came out, basically defying their stock market counterparts. Treasury traders aren't buying Jeremy Powell's upbeat pronouncements on growth. Means bond traders. In fact, in the aftermath of Wednesday's policy decision, one bond market indicator of economic hardship is flashing red for the first time since the darkest days of the pandemic. After the Federal Reserve raised interest rates and signaled the hikes in all 6 remaining meetings this year, a section of the Treasury curve, the gap between the 5s and 10s, inverted for the first time since March of 2020, March of 2020 being the onset of the shutdown for COVID. Meanwhile, the flattening trend between 2s and 10s continued. These are time-honored indicators of oncoming growth pains as the inflation-fueled fallout from the Russian invasion of Ukraine continues. So that's not very optimistic in regards to our economy there. That was from Bloomberg, if I'm not mistaken. Yeah. So that was ominous at best. Not very good. Not very good. Oh, happy St. Patrick's Day, I think, today, right? Yep. All right, now we rotate. We were inching close to our 40 area, but kind of come back here a little bit. What do we got on that 20 on the downside? Kind of like I said, it's been basically in this range here most of the evening, morning, I should say. Considering what happened yesterday, very, very quiet trade overnight. Maybe market trying to figure out where we're going to go next, right? So we're just kind of hanging around our pivot here. Patience is important, waiting for opportunities. Yeah, like I said, he was very optimistic in his comments yesterday. Maybe it was done intentionally, maybe it wasn't. I don't know. Let's see, the Federal Reserve kicked off a tightening cycle with the expected quarter-point hike, in the stock market and bond market had different reactions. The FOMC hiked rates by a quarter point. That was expected, but the summer of economic projections took what many saw as a hawkish tilt, with a median forecast rate to end 22 at 1.9%, up from 0.9% in December. And the majority of federal officials looking for 7 hikes this year. Officials see rates at 2.8% at the end of 2023, up from 1.6% the previous Fed meeting. Stocks sold off right after the release of the statement, and the dot plot with the S&P 500 dipping into negative territory. But they quickly resumed rally mode as Fed Powell spoke, seemingly taking heart at his downplaying the possibility of a recession. See, they can say whatever they want to say, but when the bond market reacts the way it's reacting and inverts, it's basically saying, I don't care what you're saying because you're not saying the right thing. Bond market is always king. Just remember that. Bond market will tell you what's going to happen before anybody else does. Seems to always be the case, has been the case, and continues to be the case. even though they're trying to make it seem like it's not so much the case. Asset markets treated the FOMC statements and projections as ambiguously hawkish on the release, but reacted more positively as the presser progressed. Powell's mentioned that the balance sheet drawdown may be worth an extra hike and comment on the easing of goods price inflation. However, small may have calmed market fears a bit. Basically, he's saying it's not that much inflation, according to him. I don't know how that happens, but okay. As we now come up here to our 40 area again. Equity market closed higher, suggesting the investors saw the Fed's stance as threading the needle between tolerating inflation and threatening a major downturn. Well, he did sound more certain than uncertain, but the bond market is telling you a different story. So I mean, he could be as certain as he wants. He's also certain about transitory inflation, if I'm not mistaken. So let's take his certainty with a little cautiousness, but only because of what the bond market is telling you with the inversion of a yield curve, which is not a good situation. Again, here we're just talking. We're not really caring about what's going on, but we just should know what's happening around. As far as our trade is concerned, we're looking at here at the 39 area. The 40 area. That's what we're looking at. We drifted up here to 8.5. Again, it's an area, right? I mean, it's not going to be perfect. So how you scale in is best left to your risk tolerance, and each individual here has different risk tolerances. So nobody here trades the same way. How you get in around the level is up to you. Well, that's a nice rotation there if you got in around the 38 area. Again, how I would trade the level is all dependent on your risk tolerance, how many contracts you trade. You have to scale in around an area. So I'm looking at 5-point stops. Okay. So, I mean, if you're trading 5 lots of this, you're scaling in maybe 38, 39, 40, 41, somewhere in that area. If you're trading 1 lots, maybe you're leaving it at 40, right? Again, everybody trades differently. So not everybody trades the same, but be a little bit careful here because we did trade off of got up to 8.5 there. Maybe you put it at 0.5 point. There's no preferred way of doing it. It has to be how you feel like doing it. Our stops are looking for about 5 points, like I said. So now we're coming up here to the 40 again. Be a little bit tentative there because we did rotate off of 8.5. If you left your 39 in there, you're getting paid off here a little bit. Again, all the individuals' risk tolerance. Good morning there, Andrea. Can we repost the levels again in the chat? And if you missed the chat, the levels are going to be up here in the chat momentarily. So there they are for you. Again, be a little bit careful if you didn't get in at 39. Now, coming back up here and retesting the 40, it's a little bit more. Maybe you take the upper end of the range there. just so that you can keep yourself in the game. If you missed it, if some of you are more risk averse, maybe you're not going to take the level at this point. You're going to wait for 50. It all depends on what your risk tolerances are. I can't specifically trade your risk tolerance, right? Again, you have to. It'd be easy if we just got up to the 40 and traded off, right? And then we could say, oh, that was easy enough. But of course, it teased us there by jumping up to 8.5, broke off, and then coming back up here to 39 now. So we're looking like a 5-point stops, I think would be doable. All right. Let's see what else we can talk about here as we work this area here. Again, if you're more risk averse, maybe you're going to adjust here even more, maybe not even take the area, only because of the price action. I mean, you have to look at the price action prior to a level getting hit and seeing how close it was and this and that, and you have to make a determination on your own whether you're going to take the level or not. All right. So again, we talked about the risk, especially how it traded off. And obviously the trade is a lot riskier once we just missed our entry point by just that much against the level that we liked. So you have to look at the price action. And again, you got to make that determination on your own how you're going to trade a level. As we continue to uptick, we're looking at the 50 area next. Oh, that was quick. Coming right up here to the 50 area. 50, oh, wow. There's a nice little trade for us. All right. That was very quick. Now that's what I'm talking about. Right. That is what I'm talking about. Oh, wow. We are ripping it. Whoa. What is going on here? Okay. Well, obviously the 50 area was big. Got it right up there. Again, you have to have obviously you have to you have to have your orders in there, right? Especially the way this thing just acted. Right. And if you think you missed one level and it's gonna, oh, what am I gonna do? Look, you got the 50 on the same 5-minute bar. So that's how crazy it is. You don't have to be afraid to cancel an order if you didn't get filled at your spot. All right. Especially if the price action, worked out and you didn't get filled on the lower end of the. So that's okay. You're always going to. The one thing about these markets for sure is that you're always going to have another opportunity to trade. Don't take much to come in there and find another opportunity to trade. It is what it is. So nice little trade there, quick trade there. Hopefully you were able to take advantage of it. Just 1 second here. All right, sorry about that. All right, so we did go back down to the 40 area there and did bounce. I would say that usually old support is not resistance. Old resistance is not support, but in this situation, because of because of certain other aspects, maybe it was initially. We did go right up to 50 there, and hopefully some of you were jumping on that one. It happened really, really quick. These are that's a very nice trade there for us. We didn't even have to sweat that one out. We didn't have to adjust. We didn't have to do anything. It just kind of just boom happened. And the reaction off of it was mainly due because people were kind of waiting for that area, maybe to get some orders in place. And then all of a sudden they got up there and then the orders came in to sell and we were in the right spot at the right time, took advantage of it. And then we'll just move on. How's that? It's easy peasy. And so that's what we like. What's what we like? Doesn't happen like that all the time, obviously. So obviously, and the other aspect is, I know it's you have to have your orders in place, right, to be able to take advantage of it because it just happened that fast. As fast as I say it happened, it happened. Hopefully, you had your orders in place and took advantage of it, even if you jumped in there a little bit after. But you had to be watching what's going on and jumping on board as soon as we got up to that 50 area. If you didn't have your orders in there. Either way, hopefully you got in somehow, some way, and then made a nice rotation here. Bonds market continues to not take too much of his very confident talk into consideration. As you can see here, they're definitely, they rallied it, and then they're around the break-even point, and again, the bond market moves that like crazy. So we have no numbers coming out today, so we'll see what happens. Let's talk about some other stuff here. Let's see if we can. All right, so right now we've got support back around the pivot area there at 30 to 33 if you're looking to buy it. Otherwise, just look at the 20 area on the downside as our next good support area. If we break down through that, so that's, again, depending on how aggressive you are and what risk tolerances you are and what you're trying to do. If you're more risk averse, you're going to wait for the 20 areas for support. If you're not, then just maybe you're going to take a price action play. Crude at 102. Yeah, well, yesterday it seemed like the talks were okay, and then everybody's denying that everything's going hunky-dory there. So who knows what's going to happen with that. The crude at 100 and whatever, it doesn't really matter. I mean, the crude went from 120 down to 90s and nothing happened. The gas prices went up. So, I mean, you can look at that's why we don't trade crude. They rip that market around like crazy. I mean, they rip our market around like crazy too, but at least we feel we can trade that. But the crude oil is really, there's no rhyme or reason there. Doesn't really have any effect on gas prices except the fact that it's going up. Even when it went down over 20%, gas prices didn't anything, they went up. So whatever. All right, bonds here continue to fall out of bed here a little bit. Let's see. Notably, stocks are coming off a correction in broader markets and bear markets among growth stocks. But this looks like a vote of confidence from the equity market that, after admitting it's behind the curve, the Fed won't overreact and slam the brakes too hard. While Powell definitely came out with a hawkish message, The U.S. economy looks less vulnerable to shocks and possible recession than other global economies, Goldman Sachs said on Bloomberg. Isn't the delay from crude to pump prices because of the refinery getting to market? Well, let's put it this way. I would say that would be true when the market is going, but it should be. But when when the oil prices go up, you get like an instant reaction in the gas prices. But when the oil prices go down, all of a sudden there's a refinery issue. Come on. Let's not get carried away here. You're right, but it doesn't work that way. I would tend to say you're right, but it doesn't work that way. What a surprise, right? All right. Next level on the upside we have is all the way up at the 62 area. All right. Well, again, we're at the next level. We're ripping around all over the place, right? All over the place. So 62 is our next level of resistance that we have. Is there a little buying opportunity? Only if you were very aggressive that you buy the 40 area on the rotation back down there. Was there a reason for it? There was, but you have to be very. Again, there's different risk tolerances. Everybody here trades differently. Nobody here trades the same. Don, you around today? Can you jump on? Let's see. The Treasury market doesn't look too convinced that a soft landing is on the cards. Bonds followed a similar path as stocks yesterday afternoon, with the prices plunging and the yield spiking on the release of the statement, especially on the short end, then changing direction as Powell spoke. At the end of the presser, the 2-year yield was up 5 basis points, while the 10-year yield was lower. Still, that was further flattening of the yield curve. An inversion of 2 to 10 curve is generally considered a warning of an impending recession. The curve continues to flatten today, and the 2s down and the 10s up a little bit. I get a newsletter that I get. That's where I'm reading it from. Kind of goes over all the stuff that happened the day before. Hits a whole bunch of houses that they talk to. This a remarkably flat curve for the very beginning of the rate hike cycle, said some analysts. 2 years went into the meeting at quite an aggressive discount versus the funds rate anyway. One reminiscent of rate hike cycle that typical before a great financial crisis, when 50 basis points hikes were not unusual. See, they can definitely raise more than a quarter point or half a point or even more than that if they wanted. They can do whatever they want, actually. On average, it takes around 3 years from the first Fed hike to the recession, said Deutsche Bank. However, the bad news is that all but one of the recessions inside 37 months occurred when the 2s and 10s curves inverted before the hike cycle ended. With all the recessions that started later than that, none of them had inverted curves when the hiking cycle ended. That's great. In fact, hiking cycles that ended with the curve still positive territory, so the next recession had 53 months on average after the first rate hike. Okay, that's a little bit too much math for me right there. I mean, it's amazing how they figure all this stuff out. Anyway, we're in a different environment than I think ever. Don, you're around? How you doing?
I'm doing good.
You trading yesterday afternoon, Don?
Oh yeah,
Oh yeah, that's what I thought. What a stupid question for me to ask.
it was good.
That was good. Yeah, well, yeah.
Even when you were wrong, it was good.
Even when you were wrong, it was good. As long as you can handle the drawdowns, right?
Yeah. I mean, I shorted it right there before the announcement, and I put the order in. Well, my order's gone. I went to look and I said, "Where's it at now?" And I'm looking down. I said, "I'm up $800. Close this thing."
Wow,
It's going
nice,
mad.
nice. Didn't even know you got filled.
I didn't know I got filled. And I'm going and I'm looking on my charts, and it made this huge gap. And I'm going, man, get me out quick.
Yeah, right. Oh, those are nice. That's nice when that happens. Of course, it does. It's not so nice when it goes the other way. Dad, I can vouch for you.
Yep.
Yeah, it goes the other way. Like, oh, why did I do that? How stupid. Saul tells me not to trade this stuff, and I'm doing it. That's what happens when it's wrong.
You know, when I first started, the guy that was teaching the class, that was his signature type trade. He loved to trade the Fed announcement.
Mhm.
And so I didn't know any better.
He didn't know any better.
Well, I didn't either. So, and I'm sitting there following him right into the fire.
Oh my God. Oh my God. Yeah, that's. I tell you, some of these guys say. I mean, again, like there's a whole bunch of people out there trade all kinds of different ways. There's not one right way to do this, but I've gladly lost enough money during Fed that I will gladly sit out and watch, even though I was not around yesterday, so that was good. Felt good. I was outside on the golf course playing golf. It was beautiful here in Chicago. 70 degrees, warmest day of the year, except it was very windy, I have to admit. All right, we're upticking here. What do we got here? 62 area. Listen, Don, I have to leave in about half an hour. I got to go pick up my daughter from the airport. So maybe if you can just carry us through the rest of the morning.
Okay. I can do that.
Yeah. So we're back here at almost a 44 handle. So think about it. We went you could see here from 2 days ago, the low was 41. 4130 area. That's a big little move here in the last 2 days. I mean, that's and I don't know. I mean, he didn't sound like everything was okay. I mean, and the bond market is definitely telling you that there's going to be some kind of recession. I mean, no matter how you slice this, it doesn't look good. But market is, they're kind of absorbing it, saying, hey, it's okay. We'll see. All right, coming up here, we got the 62 areas, the next level of resistance that we got. All right, coming up here to the 62 area. Make sure you keep your stops in place, right? There's no reason to not have your stops in place. Okay, working the 62 area here a little bit. See what the market wants to do. Very, very fluid little market. Again, we're also in rally mode. So rally modes for us are not the best trade for us. Just remember that. We've talked about this before when it gets into, especially in the late afternoon. If there's a late afternoon rally, it's one way. It's very difficult for us to trade because we need ebbs and flows. We need volatility back and forth. And then you get this late afternoon trade. And that's why we focus more on the morning hours. We always talk about the dynamics in the morning being better for us than the afternoon for obvious reasons. Well, not obvious reasons, but for reasons that we think are better for us. And that's why we focus more on the afternoon trade to help us with our opportunity, and the morning trade to help us with our opportunities. The dynamics in the morning definitely are different than that in the afternoon. Okay, working this 62 area here. Again, just keep your stops in place. Yeah, we're working this area. Now we're not getting the same reaction we got. There we go. Now we're getting the reaction we're looking for. All right, nice little rotation here against our 62 area. Again, being patient, waiting for opportunities, very important. Keeping your stops in place, also very important. Understanding how the market reacted around the 40 level also helps you if you canceled your order there. And we talked about that being a little bit riskier because we got up to 38, rotated down. Obviously, the 40 became a lot riskier trade than it was if we just got up there initially. So you have to take all these things into consideration when you're trading. You have to look at just because we have a level, you have to see how the market reacted to it prior to that and then act accordingly. But then there are times when you leave it in, depending on the situation, you know. So nice rotation there against the 62 area. Definitely got to take some profits along the way here because, this is a very fluid market these days. And sometimes you get your 5 points real easily. Sometimes you're going to get 4, right? And just got to take what the market gives us sometimes and then move on. Don, let me give you some levels here above
85.
74. We got 85. And then above that, we got 98, 44.12, and 44.23. I always never know which way these markets are going, And lately we've been getting a lot of opportunities, so there's no reason to, get upset if you had to cancel an order because you didn't get filled, right? There we go. Thanks, Don.
Well, our VIX fell.
The VIX fell. Yeah, well, we're rallying again, right?
Yep.
I mean, look at the last 2 days. Looking at 200-point VIX. VIX in the 20s here is a good number for us. It's not crazy. It's crazy, but not too crazy. It gives us a chance to work a level like you're working at 62 here. Doesn't run away from us. Obviously, sometimes it's quick, like the 50 worked very fast, but then, this one, you're given choices here to take, some profits. Obviously, it's giving you 3-4 points, not taking you 5, but also giving you a chance to get out. You have to make a decision. Nothing wrong with taking profits. We might be shooting for 5, but if the price action is dictating something else, then you do the other thing. You don't have to, either get 5 points or your stop. That doesn't, especially when the price action is not working that way. And fix all these charts here. You just never know which way they're going to go. Anyway, all right, we're just kind of hanging here. If you have any contracts left over, we get above 64.5. You want to be out of any shorts, and see if you want to maybe write this one down a little bit. And if you have any contracts left over, your 64.5 stop, and see if we can get this back down, maybe down to the 50. If you're looking, if you have one contract or multiple contracts, and you just need to keep, at least the market gave you an out. and then at least you keep that stop in place and see if we can't you can't take a little bit more than, or at least we have an exit strategy here. So keep your stop in there at 64.5 and see if we can't get and again, only if you have extra contracts and you've taken profits on something else. So you're not going to take a loss on this trade. But if you have multiple contracts, now you can see if we can't like get this rotation down a little bit. I talked to Mark, and he said he's going to be in around a week or so. So he's coming back.
Man, I'm going to take a vacation.
Yeah, you should. You definitely should. There's no doubt about it. Yeah, absolutely, positively. Yeah.
I'd rather be doing this than vacationing.
That's true too. I was going to say, where are you going to go to your south end of your state to hang out by the beach there?
Yeah, spring is sprung. It's almost time to start mowing.
Yeah. Oh, there you go. I wish. I mean, the grass was still kind of like growing around here, but yeah. All right. I like that. I like it. That spring is a nice, best time of the year, I think. Well, at least when you're coming off of winter in Chicago, spring is always the best time of the year. All right. Again, we're just kind of a little range bound here. Again, if you got profits there, if you don't want to, whoa. As soon as I said that, look what happens. Got up to 64 though. Didn't get up to 64.5. So I don't know what hiccup happened there, but again, if you have one contract or minimum contracts on, you're trying to see if you can't get a little bit more than, whatever. And, but only if you have profits and you're not going to be taking a loss on the trade, right? So that little spike there created this little push to the downside. It's amazing how sometimes you need a rally for the market to go down and vice versa. I got everybody long there for a second and then boom. I don't know what happened there, that hiccup right there, but we didn't get stopped. Well, if you had a 64.5 stop, you didn't get stopped out. And you're getting a nice rotation here. So this is how you can take a little bit more than 4 or 5 points on a trade, depending on how many contracts you trade. Just kind of, then at some point, just take your profits, right? You don't have to, you don't have to wait for whatever, but this is a good way of taking, on some contracts you got left over and be done with it. So nice little trade there if you did get in. And maybe took profits there. So nice little opportunity there. And this is how, again, the market gave us an exit strategy. Never got, keep that exit strategy in place and try to get something out of something, a little bit more out of something. All right. Well, no numbers coming out today. So, I mean, after yesterday, you don't need any numbers. I saw it. I came in. I saw the chart, there, Don, and I was like, oh, thank God I wasn't there for that. It's like, I don't know. I would have probably liked it too. Did you have levels on the downside, or you weren't playing any levels? If not, still.
Yes, and no.
Yeah, I mean, it's hard.
After I got out of that big short, it kept falling, and I kept going on. Then I started picking levels, and they would hit and they would bounce. 5, 6, 7 points, and I get out, and down it come again.
Yeah. I mean, they were. I'm sure they were, but it was very thin. I got your action right away.
They were 10 and 15 orders.
Yeah, it's crazy. It's crazy when that happens. That's the one aspect of electronic trading that's mind-boggling to me, that they can move so fast, and It has to, because the volume's still there. They're still trading huge size and volume's great, but they're scaling in and scaling out of stuff. And when somebody has to actually buy 100, it's going to gap the market, let alone any other size.
Well, I was hoping that they would come back and fill that gap.
One.
Yeah, it was big. Kind of like, where did this thing go? I'm not even registered.
There's so many gaps all over the place. But
well, let's put it this way: it worked out yesterday. That was about it.
That's good. That's good. Again, like I said, everybody trades differently. Just because I don't like to trade FOMC stuff, some other people love it. It's not like I have never traded it. It's just I just don't like to trade it. It's not my favorite. I like to keep whatever hair I have on top of my head. I don't want to look like Brad, so keep that in place. It's just kind of wait till the after effect of what's going on. Let these people who read the tea leaves, and we can always have some action afterwards.
Yeah, usually after about 15, 20 minutes or 30 minutes, it says that, it'll calm down and start going back to a pattern.
Pat, I think the market. You're talking about the market going down with the Fed's raising rates. Is happened. The market does a very good job of anticipating a lot of things before they happen, and so when they happen, you get the inverse reaction to what you think should be happening. Right? I mean, you're saying that the market should go down because they are increasing interest rates, which is what the market has been reacting to ever since we dropped from the 4,800 level down to 41. Remember, this break in the market did not come because of the war situation with Russia. The break in this market has come because of inflation situation and the fact that the market was going to raise, the Fed was going to raise the rates. So we've had the break, and the break started from the 4,800 level in the S&Ps, and we did go down to 41 here. So it's happened already. And what's been happening, and because they've been talking about it for so long, this has been you've been talking about this raising rates thing since the beginning of the year. And they finally did it at their meeting here in March. So to say that the markets didn't go down, again, it depends on how you look at it, right? So the interesting thing about markets is that they don't do the logical thing, right? That's what you expect the logical thing to happen, but that doesn't happen. And that's why, somebody asked about what my opinion of the market is and what position, what's my bias. You can't have a bias. I mean, because your bias usually is not going to be what you think it is, because the market reacts differently sometimes. It doesn't react the same way as you would expect it, because if you expect it to do something, everybody expects it to do something, and it does, then that's too easy. Right? It's just too easy. Can I tell you? If everybody knew what was going to happen, because everybody was thinking that that's going to happen, it's going to be too easy.
Well, let me ask you this. What's the difference between a bias and a trading plan or a trade that you planned out here?
All right there, Julio, have a good one. Well, a trading plan is for me to find my areas that I'm going to focus in on, to maybe find stronger areas that I like. Maybe if I give you all these levels, but I like one level more than the other, maybe I'll trade that one with a higher degree of confidence. So my plan is to find these areas. Then my plan is to not trade when the market gets into into a sideways like now, right?
Yeah. Okay.
But a bias is like, all right, I'm going to buy every dip because I think the market's going to go up,
Oh, okay.
and the market keeps going down, and I'm still buying it, and you're still long from above,
Yeah.
right? You're not getting out. So the difference is that you are, if you have a bias, you're trading your bias. So I'm not. I'm just going to look at my support and resistance areas and find the ones that I really really like, and maybe double down on my size on those. Otherwise, I'm going to just trade the levels, and hopefully I get my rotations. And if the market gives me more than my rotations, like I got my stop here at 64.5, and I'm going to see if I can't get a little bit more, then I'm just going to do that. Right now, maybe my bias is to be long, but I'm short right now because the market is telling me I got a good entry point here and I got a good exit strategy, and this is where I'm going to stick with it and see if I can't get maybe 10 or 12 points out of this trade by having a one lot, and I'm going to risk, I don't know, 2 points. So I don't care that the market's going up. I'm short. I'm just trying to see if the market at this point, because of the way the price action is dictating, I have a good exit strategy, and maybe I'll be able to get something more than my usual scalp is concerned. So,
Well, isn't that considered a bias?
no, because this is just for this. This is based on the price action at this moment in time.
Okay, so
right?
it's a short-term bias.
Yeah. Well, just because the price action is telling me this, right?
Yeah.
Right. Not because this is how I feel.
Oh, yeah.
Right. I mean, look, we're going up. I mean, if I couldn't, honestly, I couldn't care if we're going up or going down as long as we move.
Yeah.
I would be trading in the bond market, and I would have my busiest days, and I'd go out to dinner with somebody, and they'd tell me, so what'd the market do today? Everybody thinks because I'm trading that I know what the market's doing today. And I honestly couldn't answer. I couldn't even answer if the bond market went up or down that day, even though I traded. I had a very busy day. That's because I didn't even know where we're at. I didn't know how, was it up or is it down or whatever.
Yeah.
That's because I just didn't care. So I just needed the action to movement in the market, and that's all I cared about, was waiting for opportunities based on longs and shorts, based on the price action, based on my entry points, based on how the market's reacting around the level. So all of that comes. I just want movement and activity.
Yep.
All right, so we're up here. It might be flagging. If not, I think if it breaks, we break down to the 50 area, 45 to 50 area. If it doesn't, then we'll just look at the upper levels there. You got, we gave you those upper levels in the chat. If you look at the chat, we'll probably put them up there one more time for you. So I have to take off right now, Don. So I have to go get my daughter from the airport. So
Okay.
maybe you can handle the reins from now on, going out to the end of the day here. All right.
Okay.
We'll see you tomorrow. We'll talk to you tomorrow. And I told you Mark's coming back in a week or so. So
yes,
I'll tell him. I told him you need him. You need him back. All right. I'll talk to you guys later.
Take care.
Bye.
Well, let's see, where we at? I've got a little resistance up here at 61. I'm kind of dialing it in after we get the big numbers and stuff as we trade. Then, like Saul says, if we're flagging up here, this thing can just go sideways for a while and just shoot straight up or straight down. We don't know. Tell you what, I'm going to stop just for a second. I got to get a drink of water. This sinus is about to kill me. I'll be right back. All right. If anyone has any questions, feel free to ask. I'll either answer what I can or refer the rest. We're just kind of in a chop zone right now. Got a little support at 56, a little resistance at 61 right now. You're more than welcome. We're doing fine on this end. But we're sitting here watching. I'm not really doing a whole bunch today. I've had two little bitty scalps and that's it. I didn't hold them. I just got in, got out. About, oh man, I got to go back and look now. Since about 2005, I guess, somewhere in there. I'm one of Saul's students also. Let's see, if we break that 56, we're probably looking at the 53 area, 52, 53. I'm just like everybody else in this room. I came in, took his class, and stayed. I like this style of trading. It just, you got to find somebody or something that you like it, the way it's happening. And just because all we do is the same stuff day in and day out. I mean, we're not doing anything. And we're down in this 52 area. Next level down would be like 47. So I'm picking it. These are, I call them micro levels. They're levels in between levels. I'm expecting a little reaction off of like the 52. Well, there was a little one, not much, but a little one. Uh, let's see. Saul's got a level down at 50. We've got better support down at like 43, 42, 43 area right now. We've got some at 45. These these intermediate levels, they're not really market turning levels as much as they are quick ins and outs. You know, that 52 should have yielded us 54. You know, if it doesn't yield it right there as it hits, I don't care. I'm in, I'm out. I'm already been in that trade. I'm out of that trade. And so I'm waiting. Well, there's 54. Around 56, we ought to have a little resistance going back up the upside. And it's going to see how it's going to react off that 56. Went right to 56 and stopped. And I'm also watching these things on a shorter time frame chart too. So don't let me confuse you. These charts that I'm on, it's making a whole lot of sense where this thing should go and stop and turn. And we can get a close below down here. I would look to see that 47, but I don't know if it's going to do it or not. I mean, if you had an order sitting at 56, you did not get filled. It just didn't take too many. It just touched it and bounced right off of it. I am using a 1 and a 5 minute chart. That only made it down to 48. Well, I missed that one about a half a tick or 2 ticks. We're still running some support down around 44.50 to 45 area. On these intermediate levels, what I'm looking at is 47, 52, 56, and 61. I was trying to get some of the 47, but it didn't give it to me. So that order is now gone. And below 47, I'm using 42, 43 area. Let's see. How long have I been profitable? It took, let's see, Andrea, it took me a while to be profitable. How long? You know, I was, a lot of it had to do, I was hopping all over the place. You know, I just, from the courses and stuff that I took, you know, some of the instructors said, you know, I blew out my trading account 3 times. And I said, you know, that's something I never want to do. I said, if you're trading and it's, you know, and it's wrong, stop trading and try and figure out what's right. I mean, but don't just keep taking a bad situation and making it worse. That's just like throwing gas on the fire. When I look back now over my time, and for me, I think what really has to, hold on, I'm watching here. We're coming on down here. I don't know if that 47 is going to stop it or that. Oh, let's see, how can I best explain this? Probably the simplistic view is look at what the market does every day. Yeah, I mean, we go up, down, and sideways. Some days we got good movement, some days we don't have any movement, some days it's just one way. So you've got to figure out a way to trade this mess. And you've got to, and it's like Saul here, and I know that I was guilty of it. You know, I want to come in, he's going to give me these numbers and can I trade off these numbers? Yeah, he trades off these numbers. Can you lose money on these numbers? Yes, you can. But I like this type of trading. For me, I can't imagine doing anything else. I'm not a currency trader. I've traded on the NASDAQ. I've traded on the Dow. And for some reason, I've always liked the ES. The ES has just been my method of choice here. So it's kind of like, okay, if I can only swim on calm days, I may decide to go swimming when there's waves out there. Well, you just have to go up and down with the waves. I mean, swimming's still the same. But you have to be disciplined enough to get in a trade. And what makes trades really work is just you're doing the same thing over and over, and it becomes second nature to you. And when you're wrong, it didn't work out. It's not that you misread the market. There's been a lot of times I said, well, let's go in here, and you jump in, and that's a no-no. Don't jump in. Have a reason to trade. But the better yet, also have a reason to get out and a place to get out. Like Saul said, he had that 64 up there. And, he was going to let it run. And he gave it a couple of points stop just to see what it's due. Yeah. So that's what the market was doing now. That's what the price action was doing now. And so it doesn't matter. You have to gain the confidence. And these micro numbers I'm talking about, these are not Saul's numbers. This is just something I've learned to do, doing kind of what Saul does. They're quick counter trend trades, but you don't have a whole lot of time. You have to know where you're going to get in, take a quick profit, but most of all, where am I going to get out if this thing goes against me? And so, on most times, I'm risking 1.5, 2 points max. And it's not a question that I get. Well, they're not, you talking about Saul's levels, Pat? I can't tell you because that's part of his course. And there's a lot of people in here that has paid for his course to learn how to do what he does. And I have had courses from other folks that I have, paid thousands of dollars to. We're coming back down into that 45 range. We should have took it the first time. I wasn't paying any attention, but let's see, where's my next little level? We're coming down back into that 40 area. It's just too slow on that. But it doesn't matter. Out of all these courses that I've taken from these different people, in all fairness to each and every one of them, I've learned a little bit of something from all of them, except their trading system. After I got into it, it just didn't fit my personality, so to speak. And so I tended to, well, I'm going to do this. I'm going to change this. I'm going to change that. Well, when you start changing it, you start changing the outcomes too. And I didn't like, I stayed on the losing side more than I stayed on the winning side. And the guy explained to me one time, he said, your problem is you just got off the reservation. He said, if you live and die by these rules, the system is profitable. Well, I didn't like the rules and I didn't follow the rules. And so if you do that, you're usually headed for a bad spot. And I got a lot of bad habits. I'll be the first one to tell anybody I've got bad habits. At 43 should have given us 45. And we got to 44 and change. But it doesn't matter who you follow. You just have to learn to trade and be comfortable with whatever you're doing, and then just trade it. I mean, it doesn't get a whole lot more simpler than that, because we're not looking. I mean, lately these have been good markets. We've been able to capture 4 and 5, 10, 15 points out of trades. And normally it's really tough to do because our volatility is down. We do. We do trade differently. And like Saul says, it's hard to tell you, okay, everybody's going to have a 2-point stop and we're all going to make 2 points or better on the targets. Well, depending on your risk tolerance, I suffered through some big drawdowns, and I can tell you this, that is the dumb way to trade. It's better to get out, reposition, look for a better entry, because whatever you lost on that first one, you're going to make up and plus double it on the second one usually. So when you get that in your head and you start following those rules, then you will most definitely do a lot better. So I was asked a while ago, how long did it take me to become profitable? It's my belief that if you follow these rules, over time you will become profitable. And that's the kicker right there. You've got to find something that you can do day in and day out. And we're not going to be right. We don't know what these markets are going to do. We have no idea when somebody's going to come in and drop 1,000 lot on something and really push this market one way. It's kind of like the Fed announcement yesterday. Didn't make any sense, but the market moves a long way, then it turned around and went the other way. So, we don't care which way the streetcar is going. We just want to get on for the ride and get off. And so that's basically all we're doing. And when we're wrong, we have to get out. Be right back. And the only thing I can say, if Saul's still holding his 62, 63 area, he's doing really well. You know, he's traded a long time in the pit. And I don't think I could do what he did, and he's good at it. You know, and he'll be the first one to tell you he doesn't have a trouble taking a loss. He just gets out. It's not working. Get out. You know, I have the utmost respect for what he does and how he does it. It's kind of like a fella told me one time, he says, if you want to do what we do like we do. It's kind of like that. That's about as simple as it gets. And this system is really not hard. And it's kind of confusing sometimes. But as far as being hard, nah, it's not bad. But I'm not, what am I trying to say? Look, I'm sitting in for Saul just to, I guess, just to fill up airspace more than anything, a lot of hot air. But I don't work for him. You know, I don't get paid to do this. You know, I'm just sharing what I'm seeing and what I'm doing. And so there is, you know, if I say something and it helps somebody else, hey, I think that's just wonderful, because I don't think I've ever gone wrong with sharing information. I really haven't. It's always come back to me tenfold. And so, and there is no secrets. It's just doing it. You know, for years, I kept thinking there's a holy grail out there. I need to do this system. I need to do that system. No, you just need to find something you like and then do it. And then the goal is to come in, sit down, make money at this every day. All right. And then, you know, two is this, some days you just get a feel for this market. What's this market going to do? And where's it going to go? You know, that once we broke above 38, we should get back to 44, 45 area. And if it doesn't, hey, you know, you got your choice now. See, and this is where the problem with new people coming into the room and stuff, they want time to sit around and think about, well, do I take profits now, or am I going to wait a little while? Look, you really don't have a whole lot of choice. Get in, get out, because I can see us coming all the way back down to this 37 area. So I'm looking at 44 and 37 both. How now? Which way is it going to go first? I can't tell you, but I can tell you this: I would have been long at about 38.50 on this trade, and looking for 44. But you know, I won't take, I've got a stop sitting there at 40 right now. There's our 43. Come on. I'm not believing it did that. That is not right. But, that's trading. So, I'm out of the trade. I got 2 points out of it. I lost probably a point and a half, 2 points profit. And we're trumming back down to that 37 range. You're not seeing what I'm seeing looking at a 5-minute chart. But with that said, if I'm trading the levels, I'm looking at that 5-minute chart. Well, we fell short. No, it got down to 37, didn't it? No, 37 and a quarter. And we got up to 43.50. Just see, it does that to me all the time. So I just get in and get out. See, we're at and once we get like this where we have targets on both sides, it's kind of like my first trade was a good trade. Just to jump in, not knowing which way it's going to go next. I'd like to see it go to 37, then give me a setup to the upside. Let's see, 38. That ought to take us back to 41, 41.50 area. So if you took the 38, my stop's at 37. I'm looking at 41.50. Even 41 is fine with me. There's 41.50. If you got any left over, next target would be 44. But it looks like that 42 or 43 is going to stop it. Shouldn't, but it might. So there's so many scalps in a day, it's not even funny. There's the 44. Uh, 47, we've got a little resistance up there at the 47 area. Well, if anyone has any questions, feel free to ask. I'll answer what I can. But right now we're trading back into the 47 area around our blue band. We're above our pivot. Coming back up to that 50 area. I have a little resistance at 51, 52. I could see us coming all the way back down to 52. Now, whether it gets there or not is a different story. You know, it doesn't hurt to take a trade. I mean, I may have an idea what this thing should do, but the question is more importantly, okay, where am I wrong? You know, my entry on that was 48 and a quarter. And, you know, I took 2 points. That's it. I'm out. No heat. I'm looking for a better entry. And that might have been the entry. That's okay. I don't care. I made money on the trade. It didn't go against me. I am looking to scalp something else. took that trade again, got another 2 points out of it. And that's just trading one lots. You know, it's just, I have confidence in this trade that it should go down to 42. Yeah, I could buy it and hold on to it. But I can also, I mean, sell it and hold on to it and hope that it gets down there, or sell it, make some, let it go back up, sell it again. And if you want to hold, I mean, that would, the second one would have been the one to hold on, even the third one sometimes. And we're coming back into the 43 zone. We've got resistance at 42, 43. And there's our 42. So the trade worked. Just then what I was looking at, the price action, it worked. So and I wasn't quick enough, or I'd have got another 38. Time I was looking and saw the what it was doing, best I could get was 47.50 out of it. And I had a 49 and a quarter out. We've got a little support at 42, 43. We've got some more at 37. I mean, since at 64, we've been going down. Well, I hope my rambling has helped some people. And so, you know, I have been long this market. I have been short this market. In the last 20, 25 minutes, you know, so I'm in the market, out of the market, in the market, out of the market so many times a day. Like Saul says, we don't really care what way it's going, as long as it's moving. We're here to capture some of the move and get out. At max, there was probably a 6-point move in that trade. And I got 4 of them, didn't take any heat. And I'm out. So if I miss 2 points, that's okay. But that's the problem you have with one lot. You don't have a whole lot of time to figure out what you want to do. You just have to do it. Question now is that we're going to run back up to the 49. There's just not a there's not a good entry point here. There's no, your stop's going to have to be below 40. Yeah, we're coming up on 10:30. We ought to start to see the market bobble around a little bit. I need either be back above 57 or below 26 to get excited about this market. But, there's plenty of scalps in here. See, we're dobbing back up to that 49 area. Does it have to hit 49? It should. But, if I'm in a scalp, I'm not going to wait for that little bit of area of profit. It's kind of like, we've already lost 3 points out of that trade if you just sat around and waited. I did not take the trade, even though I saw the trade. I didn't have a good enough entry. I was looking for maybe a 43 pullback, then to the 49. I mean, technically 45 would have been an area you could have jumped in on. Our goal is not, let me rephrase that. Our goal is not to prove ourselves right on every trade, but to try and make money on every trade. Now, I don't have the eye sawdust to sell the 64 area and hold it, but I do have enough experience in it to know I could have sold it, bought it back, sold it again, and bought it back again. And if you wanted to let a runner run at that point in time, you could have moved your stop to break even. So let's see what happens. That's what happens when you become. It becomes, every day becomes easier. You can just, you're not in such a big hurry. I got to get out. I got to get out. I got one. I've made money on the day. This one's not going to cost me anything. Let's see what happens. We should have touched that 49. We got to 48.50. Like Saul says, you get that close, you might as well consider it hit. Now me, I'm going to hold it till the last tick. I can tell you that's not a good thing to do either. Take your profits and get out. People said, well, you left money on the table. I said, but I took money off the table too. So let's put it this way. If I was still in this trade, I'd have my finger on the out button or I'd have that stop moved up to the 47 area, 46 area. Or when you get that close, you might as well say, you might as well get me out. If I put it at 47 and we're trading up here at the 48 area and I'm looking for 49, it's kind of like, 48's looking pretty good. 48 and a quarter, 48.50. There's 49. So the trade worked out based on price action. And where do we go from here? Honestly, I have no idea. Let's see. We're at 47. Next area be up to the 51, 52 area. If you want to hold it, you could try and hold it into that 51, 52. But we're also sitting out of this blue band. And my experience with the blue band is get out. Yeah, we got to what, 51.50? That's right, dead center of it. We get above 52. Looking at 54, 56 area next. And this is just all price action, what it's been doing. I have nothing to trade off of. I mean, I can trade off this level, but it's kind of like, nah, I'm not convinced on what it's doing. Like Saul says, I don't have much conviction at this 52, 53 zone. I know I've got some resistance up here, 51, 52, a little bit of support underneath it, probably sitting at about 47. Let's see, where's it going to go? I have no idea. Should see 46. I know we got some support down here at 47. Guys, I'm just talking. Don't take these trades. They're just, I'm looking at these levels where I think we should go, where we might get a bounce. There's 47. I would have figured that one would have sent us back. Well, it did, back to 49. You don't have a whole lot of, you got to have the order sitting in there. So we know we got support at 47. We got resistance at 51, 52 area. $54 should bounced it. It's one of those things. If you want a quick scalp out of the 54, you just put in the 54 and just put in a really tight stop. And you're already got your 2 points and you're out. had my order sitting at the 54. And let's see if we can break that to 49. Where would we go? If we can get below 49.50, we should see 46. We have to get below 50. So 49.50, then we should see 46. And current price structure. That's subject to change. I am looking to trade back to the 50. I've got a little resistance here at 56. I had to abandon my 50 position. After this 58, 60, 61 area, we got a little resistance. But it looks like they won't back up to that high. At 56 should have dropped it a little bit. Below 56, I would look to see 54, then 52, 51 area. I am short from 58, looking for 54. Yeah, we get to see if it's going to come on down to 50. Are you back already? We're still plodding along. We're just scalping. You know what I was telling you a while ago? You need to, if it's not working out, just get out and reposition at a better level. You know, that's exactly what happened up here at this 56, 58 area. I repositioned. I had the 56 and I had the 58. I took some off at 54, still running a runner, looking for 50, 51 area. You know, we're down here. I'm out. I don't care. The price action worked out. It just didn't work out as quickly as I wanted it to on that first trade. So I just scratched it and then waited till I got another place to enter. Where is it going? I have no idea. I know that we have a little support at 47. 40, we still have some down there at that 45 range. Let's see, 47, 43, 44, 45 area. You know, it's this, whatever you do in this range here, if you take it, you're just going to have to manage your stops really tight, because this thing could decide to really take off in a direction. I don't mind trading it. It's just the rule number one is just know where you're wrong and get out. If your trade's not working, you're a little bit uneasy, just go ahead and either scratch the trade, take a little profit. You know, I'm out of this trade. My analysis originally worked. I didn't really like taking two up there at that 56 and 58 area, but I believe, like Saul said, you know, it's a high confidence area. And we got back to the 50, so I'm happy. You know, I was able to get 2 points off the first one and 7+ points off the second one. So there's just an abundance of trades during the day. It's just that right now everybody's going to start going to lunch, and this thing's going to start acting squirrely. And you put on a trade now, they're liable to run the stops on you. I think this is just people repositioning after London gets out. In Germany, their markets are shutting down. And today is, let's see, I think at 11 we have a bond auction today. Now, don't ask me what that does to the market because I really don't know. It's just that there's been plenty of trades today. So guys, here at 11, I'm going to repost the numbers here again. In case somebody came in late, I think everybody's already gotten them, but I'll stick them in one more time. Y'all can write them down that way if you're going to trade this afternoon. Just use the numbers. I guess since about 9 o'clock, I've just been basically using the support and resistance, those mini support and resistance levels as spots to get in and out of. I've also been using Saul's. I've been using mine. Been using price action. The power, that video. No, Randy, now this is just my way of thinking is look, right now, in New York's going to lunch right now on the New York Exchange. And at 12 o'clock, probably after the morning session, everybody's getting out of the market right now. We have London, we have Germany, the DAX. We have the DAX is a big player over there, and we have the Swiss and all of these guys. Their markets are shutting down now, so if they're in trading the ES here, they've got to make up their mind. Am I going to hold this position? Well, unless they know something awful good, that sure is awful risky, because you can wake up in the morning, you can be awful rich or awful poor, just depending on any geopolitical upheaval or whatever you might want to call it. But regardless, you don't want to be in the market. These guys are shutting down, they're repositioning, so that's going to make this market. Usually it starts at about 10:20 to 10:45. People got to either reposition, they have to get out. So then this thing will go up, and probably at about 11 o'clock or a little after, it'll slow down a little bit. Now, New York's gone to lunch, then Chicago's gone to lunch, and then the only people there's not a whole lot of traders, and it gets kind of thin, so they can run the stops thin. Evidently, I used to when they had I always said the floor traders, the big guys went to lunch and the little guys got to chase the stops. Now, whether that was true or not, I can't tell you. It was just a saying that I come up with. In the afternoon, they have positioned this trade, but the afternoon, they're going to have to come up with a direction. And they'll usually take this thing in that direction to around 2:30. And then after 2:30, that's where it gets squirrely. Then because at 2:30, they've either got to start getting, if they've been long all day long, or they've got to get out, or if they've been short all day long, they've got to get out if they're not going to hold their positions overnight. And so you see a lot of this thing gets really volatile. And so Saul says, if you're going to use the numbers, use the outer band of the numbers later in the day. In other words, use the 70, 85 or the 74 down if we're going down, and use the I wouldn't feel bad about the 85s or for the 98s on the upside. Just depending on where the market is at that time. But no, they can run stops anytime they want to. But usually it's somebody taking a position, somebody big, and either a hedge fund or something like that. They're hedging their portfolios, and then the options guys come in, and then they're doing things, and all of it affects the market in some way, shape, or form. It's just that I can't keep track of all of it. I don't even try. I just trade what is. Now, if you had this trade right here and you got long at about 50.25, it did all right. And I had a reason to take that trade at 50.25. That was a Saul. I call it a Saul special because I learned it from him. He taught it in his course. The man doesn't. Let me read. He says a lot. Don't get me wrong. But I guess the way he says it, he's so cool, calm, and collective. He just he's got one. How would you say? One personality to trade, and that's just nice and easy. And it just, this is what I'm going to do. This is where I'm going to do it at. If I'm wrong, this is where I'm getting out. It is that simple. But yet, when your money's on the line, to put in an order before the market even opens at 8:30, you've got all these orders stacked above and below. You got to have some confidence. you really have to have confidence. And I'll tell you what, I was looking back at my logs the other day, and I started keeping these things kind of pretty close to when I started with Saul. So I started with him about sometime in the summer or late summer of 15, I believe. And I started keeping all these numbers. And there has been so many times, he's given a level, market opens up, runs down, and it hits that level, bounces off, and that's been the low of the day, or it's been the high of the day. And it's kind of like, you say what you want to, if it, that's not to say these numbers are exact. These are just areas that the market should get a reaction off of. And based on our volatility and our stop preference per personal reasons, and trading account risk tolerance, as new traders, you're in a trade, it's kind of like you like the ones that hit the targets, bounce off of it, you're in the money, and you think, oh, this is easy. Well, but you don't like the ones that hit it, run through it, and they almost stop you out, and they'll come back down, and you think, well, I'm going to get out. Then you get out because you're scared of losing money. And the next thing you know, there it goes. He makes an 8 or 9 point run on you. But if you don't get out, that's where the decision making process. If you don't get out, it can turn around and run 8 or 9 points against you too. We don't know. So the decision making process for each and every one of us is the hard part that we fight as individuals with those demons that are within each and every one of us. And so we're taking a trade, and if you know where you're wrong, you put your stop in there, and you don't care, because that trade is not going to break the bank. It will allow you to trade some more. And if you're wrong and you need to get on another position, it takes you out and it allows you to get into another position. Whereas if you're in a big old drawdown of, in these markets here, they're ferocious. And so our stops have to be bigger. So, and if it's too big for your account size, that's okay. You don't have to trade today. If the waves are too big, you don't have to swim today. But if you think you're going to try it, you just have to realize that, look, my profits and losses can be a lot bigger today, both ways. And I guess that's the hard part about trying to explain this to people, is that they're not really, I don't know how you say it. They're not, I was naive when I first started. Yeah, I want a trading thing. This is what I do. This makes me money. And if that's where I'm stopped out, it sounds really simple. But when you sit there and you hit 3 trades in a row and you're down 5 points on each one of them, you think, I'm down. Oh man, the world's coming to an end, Well, you just quit and come back another day. It's not working for you today. And so, but when you learn to look, I'm in